As you did highlight, it was the tech giants that we're constantly watching here. This week tech, the latest to have the gauntlet in terms of earnings, and Apple and Amazon both reporting yesterday. And I want to dig more into those results with our next guest. Santosh Rao, head of research at Manhattan Venture Partners, joins us now. And Santosh, why don't we start with Apple, because just the sheer size of that company always, its moves riddle throughout the market here. And when we do look into what Apple reported, it was interesting because we did get quarterly revenue that grew about 1%, but they omitted an earnings forecast for the first time in more than a decade. So there are a lot of question marks about where Apple goes from here. Fiscal second quarter sales came in at $58.3 billion. That was a little bit better than expected here. So what do you make of the quarter and what Tim Cook had to say on the earnings call here?
Yeah, good afternoon, Zack. I thought overall the Apple's earnings were pretty good, considering the whole circumstance of this pandemic. I would say the revenue numbers were stable. I mean, 1% growth is still good, considering we thought it would be worse. The iPhone sales were less bad than what we thought. So I think overall that was good. The services revenue has become a bigger anchor in this whole business. So that's also good. What I liked about the commentary is he said the second half looks good. China is firming up. So he expects a better second half. And that's good. I mean, we can run into the 5G cycle in the September, October cycle. But let's just see where the dust settles with this whole thing when the market opens up. But overall, he's very optimistic about the second half. So I think I like that behind the quarterly reports. I think net, I would say I'm still upbeat on Apple.
Yeah, we did get that update from Mr. Cook saying the last part of March and the first part of April were very depressed, but then we saw a pickup relative to that period of time in the second half of April, so did offer investors optimism on that front. Another sense of optimism, though, was what Apple continues to do with its cash. They did announce a boost to its buyback program of about $50 billion. That was a smaller increase than what we saw before in 2019 and 2018 when they did $75 billion and $100 billion respectively. But they also announced they'd be increasing its quarterly dividend by 6% to 82 cents a share. And I mean, these moves are pretty important here, considering the way that we've seen companies cut their dividend and say that they're going to halt share buybacks. Apple might be in a little bit of a different camp here when you think about how much cash they have on their balance sheet. So what do you make of those moves, bucking the trend that we've seen from other companies?
I mean, it just shows the strength of this company. It's just a cash machine, this company is, and they don't have to answer to anyone. They don't have to answer to any politicians. They generate the money and they can give back and they can do whatever they want with that. So I think that's good, shows the strength in the company, despite the whole outlook, the gloom and doom outlook out there. I think Apple is showing that it's moving along. I think they can withstand this whole crisis and they can come out strong on the other side of this whole thing. So I think that's good commentary on the company, this whole thing.
In regards to their other services, right, and we always constantly look at hardware, iPhone, always important for Apple, but they have increasingly been talking about their services side, and we saw that continue to grow here. There are question marks, though, about what impacts could be on that front if they continue to delay the rollout of some of their next-gen models here. So just curious to get your take on the way that some of these ancillary revenue streams have become even more important when you look at wearables, services, and other things that Apple is trying to focus in on here.
Right. I mean, that's the bear case on this company, that, you know, the services revenue is a function of the iPhone growth. And you need that ecosystem to grow, so the services revenue grows. So that's the bear case. But I think there's still a lot of penetration to be done on the services side. So there's a lot more room to grow there. But at some point, I think with the 5G phones down the road and the SE phones coming on, so I think you'll see the base grow. And with that, you'll see the services revenue grow as well. So I think overall, yes, there's a near-term pressure with the iPhone declines. But I think overall, in the long run, there is a path to moving up. And iPhone sales are expected to move up when the 5G cycle takes over in the September quarter.